In the first part, we calculated prime cost. So before you watch this tutorial, I'll recommend you watch the first part, okay? Because this tutorial is a continuation of our last tutorial, okay? There we calculated prime cost. Today now we will calculate cost of production. So how to calculate cost of production? So prime cost plus factory overhead plus opening work in progress minus closing work in progress. So we will get cost of production. Yeah. So first tutorial will be very important. So here, for your better understanding, we are following a question which is taken from 2023 IGCSE accounting past paper. What is there in the question? Salman owns a footwear factory. He sells to all of the 3 local shoe shops. Salman prepares his financial statements at 30 April each year. At 30 April 2023, Salman's ledger account balances included the following. So here we see a lot of balances. So these all are not related to the manufacturing account, okay? So here factory overheads will be included. Yes, we see rates and insurance. This is factory overhead. We see here factory supervisors wages. It is also factory overhead. Electricity and general expenses are also factory overhead. And then we will write depreciation, okay? So these 5 factory overheads we have on the question, okay? These are only related item, okay? So here we have prime cost, okay? So first of all we will write prime cost, okay? We calculated in the last tutorial. So let us write here prime cost. We calculated $131,006, okay? Good. Now we will write factory overheads, okay? So let us write here add factory overheads, okay? So here we have factory overheads. It is wages, yeah? Factory supervisors wages, it is $27,500. So here let us write our factory supervisors wages. It is actually indirect labor, okay? So we will write here wages factory supervisors, okay? So here on the question the amount is $27,500. We will write in the first column. We will add all the factory overheads. Then we will take the addition to the outer column. Okay. Great. Then we have here our next item. It is factory electricity. We see here $11,442. Okay. So let us write here factory electricity. So it was $11,442, okay? So you might be thinking why we wrote this amount here, because we have an adjustment related to this item, okay? So let us have a look at the adjustment number 4. So here we see at 30 April 2023, factory electricity of $1,048 was unpaid, okay? Unpaid means it is not yet paid. So unpaid, outstanding, due, accrued, area, owing, okay? If you see one of the 6 words, you will take this amount and you will directly add to the amount given on the question, okay? So this all means same, okay? So here it is written unpaid. Maybe another question it will be written accrued or outstanding or due, okay? Whatever. So we will add this amount here. So let us write here plus 1,048. So now if we sum up these 2 amounts here, we get $12,490, okay? Great. So what is our next item here? So here we have rates and insurance. It is $17,528, okay? So this is our another factory overhead. So let us write here rent and insurance, okay? So it is here 17,528, okay? So again we wrote here because we have an adjustment related to this item, okay? So here adjustment number 3, Rates and insurance are to be apportioned 3/4 to the factory and 1/4 to the office. Okay, so three quarter of this expense related to the factory and 1/4 is office. Office means 1/4 will appear in the income statement. In my next tutorial, I'll show you how to prepare income statement for manufacturing account. Okay, so 1/4 will appear in the income statement. So here total 4 quarters. Okay, so now how to calculate? So here we have 17,528. Okay, this all for 4 quarters. We'll divide by 4 and we get here $4,382. Okay, this is the amount for 1/4. Okay, this amount will go to the income statement. Okay, because it is not related to the factory or overheads. Okay, so let us subtract this amount, 4,382. Okay, after subtraction we get here $13,146. Okay, great. So 3 we finished. Now next one we have here general factory expenses, $8,244. Okay, so it is factory expenses, so it is also factory overhead. We will write here general factory expenses. So there is nothing related to this item, so directly we will write here $8,244. Okay, good. So all 4 items we have taken from the question. Now we have depreciation. Yeah, so here on the question we have factory equipment at cost $90,000 and factory equipment provision for depreciation we see here $43,920. Okay, so here we have asset and provision for depreciation. Now we will see what is written on the adjustment. So here number 5, factory equipment is depreciated at 20% per annum using the reducing balance method. Okay, so reducing balance method seems complicated to many students, but it is quite simple, but you need to just understand. So I have many videos on this topic on depreciation. I'll put the link of the playlist in the description box. You can watch it. Okay, so here what is the main thing of reducing balance method? So main thing is, first of all, you need to calculate the net book value. Okay, then you have to multiply the rate of the depreciation by net book value to calculate the current year depreciation. Okay, so here how to calculate net book value? So we will take the cost price of the asset, means fixed asset, which is equipment here in this question. Then we will subtract the previous year depreciation. Okay, that means cost minus provision for depreciation equal to net book value. Okay, so let us write here, let us calculate here. So we have here cost of the equipment, it is $90,000, right? So here on the question we have provision for depreciation, it is $43,920. Okay, so now if we subtract this amount from the cost, we will get our net book value. Okay, so what you get here, $46,080. Okay, the net book value. Now the rate of depreciation is 20% on the question. Yeah, so if we multiply 20% here, so what you get, it is $9,216. Okay, so this is our depreciation. Okay, so we will write here depreciation. So how we calculate it? Let us write the working here. So first of all we wrote the cost price, then we subtracted the provision for depreciation, which was $43,920. Then we multiplied the answer by 20%. Okay, rate of the depreciation. Then we found $9,216. Okay, good. So we finished. We wrote all 5 factory overheads here. Okay, now we will sum up this all. So what you get here, $70,596. Okay, this is total factory overhead. Okay, great. Now we'll add factory overhead to the prime cost. Okay, so let us write here the addition. It is $201,602. Okay, the addition of these two amounts. Okay, factory overhead and prime cost. So now how to calculate cost of operation? So here now we will add opening work in progress and we will subtract closing work in progress. Okay, we'll get cost of operation. Okay, so let us write here add opening work in progress. So on the question it is $15,200. Okay, so if we sum up we get here $216,802. Okay, we added here opening work in progress. Good. Now what to do? Now you will subtract closing work in progress. Okay, if you have on the question you will subtract, if you don't have, finished. This is your cost of production. Okay, in the question we have inventory at 30 April 2023. Here we have work in progress $16,100. Okay, so this is our closing work in progress. So here we will write this amount less closing work in progress. It is $16,100. Okay, now if we subtract this amount from here we get $200,702. Okay, this is our cost of production. So let us write here cost of production. Okay, so this is how you need to prepare a manufacturing account to extract cost of production. Okay, so next tutorial I told you will be very important. There I will show you how to prepare income statement for manufacturing business.